Hi everyone, thank you for joining me today. My name is Mike Shillin, President of Shillin Wealth Management. Well, here we go. Everyone's favorite time of year, tax season. I wanted to take some time today to not only talk about some of the changes that have occurred in the last 12 months, but also to try to avoid any mistakes or surprises for you who aren't aware that the tax law changed in 2018. My objective today is not to give anybody any specific type of tax advice, but simply to make you aware of the changes that have occurred. I want to be very clear in stating that I am by no means a certified public accountant or a tax professional. So please make sure that you consult some of these ideas with your dedicated tax person. So let's talk about the biggest surprise. We're all hearing some of the national headlines about people expecting or even seeing lower tax returns. A lot of you may not be aware, but the federal government provided an act that essentially overhauled the tax code as of the beginning of the year 2018. This is going to be a little bit of a surprise to a lot of people because, as you're hearing, tax returns have been smaller. The trade-off in the whole equation is that along the way, the tax withholding codes were also changed so that you should be, in effect, seeing a higher paycheck on a month-by-month basis. The best advice I can give anybody, especially here in 2018 tax season, start early. There's going to be changes that impact almost everybody in the United States. So not only should you get it started early just to avoid any surprises, but for peace of mind so that you can also react to some of these changes in a timely manner as well. Let me be clear, the tax filing deadline is April 15th, 2019. There are a lot of things you can still do to adjust your income in a legal fashion, of course, before that tax filing deadline. I really want to reiterate the fact that this isn't the year to wait until April 14th. Let's make sure that you're taking the steps necessary now to avoid any confusion, any stress, or any pain come that deadline. So let's just talk about a couple of the things you can do if you do find yourself in a situation where ultimately your income tax isn't where you were expecting it to be. There's two different types of deductions in the world of accounting. You have above the line deductions and below the line deductions. Let's first talk about some of the major changes that have occurred with above the line deductions. An above the line deduction is something that simply reduces your total gross income, either for yourself or your spouse. Probably the one that means the most to everybody is your work 401k or 403b account. This is one of the easiest ways that you can, in essence, reduce your gross income. In 2018, a person under the age of 50 could put $18,500 and defer the wage on that money. If you were over the age of 50, you could also then add an additional $6,000 catch-up contribution. This is one of the biggest changes in the new year, as that maximum contribution limit has now gone up $500 to $19,000 with the same $6,000 catch-up limit if you're over the age of 50. So for those of you who are either 49 and under and maximizing your current contributions, or if you're over the age of 49 and 50, this would be a great time for you to reassess your situation to see if you need to make some tweaks given the new tax law. The other above the line deductions are retirement IRA accounts, such as traditional IRAs or Roth IRAs. In 2018, that limit for both of those under the age of 49 was $5,500 per individual. That limit has now gone up to $6,000 in 2019. So one of the most popular above the line deductions that a lot of people take advantage of this time of year is the pre-taxed IRA. For those of you who are surprised with the change in your tax return, make sure you consult with your CPA or tax advisor about whether or not an IRA makes sense for you to try to deal with some of these changes. I can't say it enough. Not only is it important to take your future serious and save for retirement, but what a great way to not only get a tax break and save for your future. The other big thing that I would want to point out to you on that same token is make sure you're aware of the fact that the phase-out limits apply to your income either for yourself or your spouses as well. Here I've listed a table of what those income phase-out limits are, where you can see if an IRA will be a viable option for you in 2018 or 2019 to help you reduce that above-the-line income The other popular item that I think is worth pointing out too, which has become one of the most popular above the line tax reductions because of the healthcare law, is the health savings account. For those of you who are utilizing a high deductible health insurance plan, a health savings account is a great vehicle not only to earmark money for future healthcare costs, but it's an easy way to reduce your overall gross income as well. From 2018, an individual could contribute $3,450. As a family, you could contribute up to $6,900. If you're over the age of 55, you could also then contribute another $1,000 as a catch-up. In 2019, you can see that like the IRAs and the 401ks and 403b plans, the HSA account also received a step up in contribution limits. These are some of the easiest ways that you can help reduce your overall income tax. Please make sure that you're either working with your financial advisor or your tax professional to see where these types of vehicles make sense so that you can not only save on taxes today, but also help make sure that you're ready for the future as well. The other thing that I want to spend a little bit of time on are what are called below the line deductions. These are things that you're going to want to really spend time with your personal accountant on or CPA to make sure that you're maximizing to their fullest. These are things like your mortgage interest, your medical expenses. These are things, if you're a teacher, like classroom expenses. These are also areas where tax credits come into play based upon your personal or family situation. These types of below-the-line deductions are more specific in helping you find out where your marginal tax bracket is going to fall. So a lot has changed year over year from 2018 and into 2019. My best advice is to take the time, plan early, book a couple of extra minutes with your tax person, and make sure that you're maximizing all of these to avoid any headaches. I know it's easy in today's world to get caught up in the politics of everything. Take the time, do the planning, and you won't be sorry. One of the other things that I would highly recommend that you do as well is the sooner you file your taxes, the lower the probability of any type of identity theft. This has certainly become a problem that's been on the rise over the last couple of years. From what I've been told from various accountants, one of the best ways of avoiding this issue is by filing early. We've spent some time going over some of the various changes from 2018 compared to your 2017 tax returns. We've also looked at how some of the above-the-line tax items have changed with respect to 401k, 403b, and IRA contribution thresholds. I'd also like to spend some time on giving you some ideas as to what you can be doing with your tax return money or some of the extra windfall of cash you might be getting from doing some extensive tax planning. You know, this time of year, it's easy to take that extra money and buy something fun. But some of the best ideas I could ever give any of you are to really evaluate your personal financial situation. Items such as building an emergency fund, paying off some credit card debt, paying down a mortgage, building up a non-retirement account such as a brokerage account where you can invest in various securities. There's a lot of great ways where you can create some new financial goals with this tax money. Our team is here to help advise on any of those items. If any of you are looking to use this tax season to enhance your wealth, we're happy to help you with those things. Above all else, my purpose today is to, if anything, help to provide a little bit of an education about what's going on. And if anything, I hope that I can at least help some of you avoid some surprises that could arise here over the next couple of months. So I know the high world of finance isn't always the most exciting. And if you're like me, tax season certainly isn't Christmas. So it's not something that we all like to deal with. But again, I can't say it enough. Take the time to start planning early and really take the time to understand some of these changes so that you can make sure to stay on track towards your long-term and short-term financial goals. For any of you who have more questions on this, please don't hesitate to contact our office. For those of you who feel that maybe you need to start working with an accountant or a CPA to maybe figure out how this actually applies, please let us know, and we would be more than happy to connect you to some wonderful tax professionals here in the area. So let's recap today's discussion. A lot of changes have happened in the last year. My objective today is not to give you tax advice, but to prepare you for those changes. I'm going to leave you with 7 ideas to to help you prepare for taxes. So number one, let's prepare early. This isn't the year that you want to be scrambling until April 14th to get your taxes done. Number two, protect yourself from identity theft. Identity theft through tax season has become one of the biggest problems that we deal with in the financial world. The sooner you get those taxes taken care of, the lower the probability of that happening to you. Another big issue, and my third point, is make sure you understand your above-the-line tax deductions that are applicable to your situation. Things such as adjusting your 401k or work retirement plan contributions, the possibility of funding an IRA, or even taking advantage of an HSA account at work or on your own are all easy ways that you can reduce your taxable income. For those of you who are in a position where taxes aren't an issue, talk to your tax professional or financial advisor about funding Roth accounts, because those can also be great long-term vehicles as well. Make sure you look at your 2017 tax return. I think it's good for you to compare apples to apples to see what's going to change so that you can see some areas where you can still make some tweaks before the April 15th tax deadlines. The last thing is life changes. For some of you, you've gone through some major life events in the last 12 months. Unfortunately, some of those events are going to have an impact on your overall tax situation, whether it's having a child, losing a loved one, starting a business, selling a business, retiring. All of these things have an impact on the bottom line for your taxes. So please consult with your tax accountant or CPA to see what that may mean to you. Ultimately, guys, I want to avoid sticker shock. This is going to be one of those years where there's going to be some unpleasantries for a lot of people. I can't say it enough, start early. As always, we at Shillin Wealth Management appreciate your business, and we look forward to a great rest of the first quarter here in 2019, and we will be talking to you soon with our first quarter market update. Thank you.